So before getting into like geopolitics and how they're affecting maybe India today, I'm just thinking of a good place to start. Like what I had in mind was, do we need to go back to the initial days of venture and how money was being raised? Maybe I don't know, in 05, oh 04, when I feel like that was the first wave of VC. Is that fair? Should we go there, or where do you
We
think?
can start with the history of VC
Sure.
and then move on into what the current state
What is the
of
current
affairs
state
are,
and how it's affecting?
and how the world is rapidly changing. We can also do some crystal gazing towards the end.
Sure, sure.
Right. So I'm fine with that. Yeah.
So can you walk us through like I don't know 03, oh 04, like how?
How it happened. Yeah. So the entire VC space in India started from in the 1990s, and initially those funds have been part of large financial institutions like City Ventures was one of the initial funds. Then we had UTI. From a standalone VC fund perspective, I think the first, the probably initial one or two funds was a fund called Venture East in Hyderabad. Then later on, Sequoia came into India, and that is when I would say, the actual VC ecosystem started.
Sequoia came in 05, I think, no? 04, 05.
04, 05. So I think the initial first 4-5 years there was not much movement.
Okay.
So the initial funds in 1990, they were just trying to capitalize on this entire wave of either Y2K and there was an entire boom in the US in the dot-com era, right? So they were just, it just had some spillover effects in India, but it didn't clearly have any major funds, right?
Like not only funds, like I'm also thinking like my first exposure to like a big or a successful company is like Flipkart, which maybe is 08, which I think started in 08. So I don't even know what these venture not only I don't know what these venture funds were doing, but also even the companies I can't really recall like I don't know huge companies of in India maybe in the early 2000s.
In the early, the thing is that some of the investments were mostly in the IT services space, right? So there was some quite I think 3i Ventures was one of them which got VC funded. Among the earliest VC funded services companies was this you also had Mu Sigma, right, which was it was part of the cohort. Both Flipkart and Mu Sigma I think were part of the cohort of 05, 06 time frame. There was this funds called as Erasmus Ventures. So which later got acquired by Axel, and then they became the initial team of Axel India.
By services you mean stuff like Infosys, like I mean
Infosys
you're doing outsourcing work for the US companies or for Western European companies, right?
Absolutely. So either outsourcing work or it could be like analytic companies which are doing project-based work for the US and European clients, right?
Okay.
So those were the initial set of investments in the VC space, and that was a very profitable business, right? So many large, like I said, the 3i Ventures, I think they got a good exit. So it was a good path. Probably the birth of large VC firms in India started with 050, 04, 05 when Sequoia first came to India. I think they acquired Westbridge Capital, right, or acquired Wedgebridge Capital, the team at Westbridge.
So it was not like how it was set up in China, is it? I think they asked Neil Shen and another guy, I think Zhang, to head the China.
Correct. So the different funds have followed different approach. So I believe Lightspeed when they came to India, so there were some I think the existing partners worked in the US, and so they asked them to set it up in India. But when Sequoia and Axel both came, they acquired the local teams which were already working over here, and then that teams became part of these large funds.
And the promise that they saw was like, I mean, huge market, huge population, and a lot of untapped potential. Is that fair to say, or was
that? So in my opinion, this particular story has not changed for the last 15 years, wherein the Indian consumption story was shown as the next big growth wave after the Chinese story, and so a lot of Silicon Valley VCs as well as major investors in US wanted to take advantage of this particular scenario, right? And the expectation even in 06, 07 time frame was that India is going to become the next big thing after China, and but sadly India's kind of
Stayed the same.
I wouldn't say stayed the same, but disappointed to a great extent, right? Even from the VC perspective, some of the funds in China have done so stupendously well. Like for example, Sequoia China is probably one of the most profitable or most successful VC firms. Even if you look at China, Sequoia US, but India has not been that case.
I was looking at AUM, assets under management of Sequoia China and Sequoia US. Very close. I think Sequoia China is about $56 billion, and I think US is, I don't know, close to that. I think $59 billion.
Correct.
Only a couple billion difference.
Absolutely. But the Chinese one have done even better because they did it in a much more compressed time frame, right? So they just did it in the last 15, 16 years.
Right.
When compared with Sequoia US, which
50
has
years.
taken like 40 years.
Yeah.
I think 1970, 1980s or 1970s, I think they started.
Why do you think that is though? Like Indian market has not delivered. Like I was also looking at in prep for this. I don't remember I don't know if it was Tiger Global or I think it was Tiger Global CEO. He was mentioning even his complaint was, and this was very recent, 2-3 months back, I think, where I think he was talking about how even they have been a little disappointed, or they have the slow results have been a little shocking, or I'm paraphrasing his words here, but to that sentiment itself, it's been like, I don't know, 15 years, 20 years, and
the returns have not yet come, right? So I think the Indian market is, there are two problems with the Indian market. One is, of course, the slow pace of reforms that has taken up, and the second thing has always been the infrastructure has been a big bottleneck. And I'll also add on third reason is that the per capita income of India has not grown as fast as what the Chinese per capita income has done, right? And to a great extent, if you look at how China has done is that through their one-child policy, which probably is going to bite them today, but in the 20 years back, they had most of the population which was in the working age population, right? And so that helped them really accelerate their growth. And I think 2001 or probably 2000, they joined WTO, and because of that, manufacturing really picked up. And so the first 7-8 years probably manufacturing did well, which really improved their per capita income. So it grew really fast, right? So China has been growing like 8 to 9% for the last 30-40 years. So in the mid 2004 2005, China was able to really take off, and they were probably the largest market outside US, wherein so much of money could be pumped. And in 2007 2008, I'm sure you also recollect, though I'm not sure you're that old, but the thing is, in 2007 2008 we had this great financial crisis, and during that time the Fed started reducing the interest rates, and for the last 15 years we have been having a low interest rate regime. So when the interest rates was reduced, a lot of capital was produced, and you can say exported by the US, and the biggest beneficiary of that particular pumping of money has been China.
Yeah.
Right.
And the difference is huge, right? Like even today things might be different. I think China, there's a huge slowdown, I think, in the inflow of capital. But if you go back, I think 2 years back as well, I think the amount of money being pumped into China, I think 1/3 of that was being pumped into India, I think, or even maybe less than that.
Maybe far less. I don't have the exact number, but I'm not surprised if it is even 1/10 or probably 1/5 of what China has been able to consume, right? And that's partially because of the way the trade imbalance is there between the US and China, right?
What do you mean?
So, for example, if an iPhone is produced, then China exports those iPhones to the US, and US gives dollars to China. So what does China do? That it has to invest in the US. It doesn't want to invest locally because then inflation will shoot up, or it's a communist regime. They don't want to encourage consumption. Different reasons. So they invest it in the American economy, primarily in the form of treasury bonds.
Okay.
But even some portion of it is, again, it finds its way back into the VC world, or I would say the you have to also understand that in early part of China, the capital markets of Chinese, stock exchanges were not as well developed as even India, right?
What do you mean?
For example, I think till recently, or probably till 2010, 2011, India was having the largest stock exchange, right? BSE and NSE, if you put them together. There was a good depth in Indian stock exchanges, right, when compared with the Chinese stock exchange.
Okay.
It was again very superficial, only at the top level. There's not much trading volumes and all that, and plus it was heavily controlled by the government and all that. It's only that, probably in the last 10 years that they started giving up some of the controls, but now they've again, taken back. So it's like
There's been a
full
huge
cycle.
crackdown. You're talking
There's
about
been a huge crackdown
in China. Right.
But the crackdown in China was more, say, in the tech entrepreneurs,
Yeah.
right, which happened recently. But in the past, a lot of the crackdown that happened, was on the public market side.